Morning traders, how's it going? Going to look at Fantom FTM on that ticker. Very nice upside day and a lot of signs of pullback right now, but we are seeing a little bit more consolidation, which is typically what we find after big, nice upside gains like we had. So just on the day yesterday, we closed huge, massive candle, 18%. So we haven't seen big rally days like that in quite some time. And what's actually significant right now too is that over the last 2 days, we've actually seen a really nice break and close above the major resistance point that we were looking at Fantom, which was actually prior to what we set before the big FTX flush. So the fact that now we're actually seeing prices sitting on top of that resistance point and actually battling out and showing a lot of signs of strength above where we were actually sitting at before is very nice. So even in this pattern where we set the high, pulled back, set our lower low, and then lower high, higher low, and then once we actually topped out on top of the 26-cent mark, that was resistance. Signs were looking good and very nice from there. So as you can see, if we look at volume, big, huge amount of just nice increasing bullish volume. So a lot of confirmation and strength in this move. So we know that this is not just a fluke and likely we're going to expect a trend to start forming in this instance. But with trends, we do know that we do need to set our high, pull back, and set a higher low. So it does seem like right now that is going to be a little bit more of the most likely course of action. And so at this time, I want to actually flip over into the 2-hour chart first, just to talk about the little mini short trend. And the reason I'm looking at the 2-hour chart is just because we've seen such a reliable signal based on the exponential moving averages. So we are looking at kicks off of the 50 period several times on these big moves before kicking off the next big break. So consolidation kicked off, nice big break. And then once again, even in this short little mini instance, kicked off the 26th. So we know that the exponential moving averages on this 2-hour chart are pretty reliable. So if we do look at those as being a signal and a guide, then if we do pull back and test this 26 period once again, then that's pretty much going to line up right with about the 32-cent mark, which is a very nice price point for closing support right now on this 2-hour chart. If we did fall back and break below that, I would expect this exponential moving average for the 50 would actually line up about 31 cents. So not too much farther, and that is still a reliable signal that we could see to ultimately kick off and continue another uptrend. So really it does kind of count what happens in this recent pattern right now and a lot of what the rest of the crypto space is doing as well, because we know that we've had a lot of great run up over the last 2 weeks. And so even if we flip over into the 2-week chart or the 1-week chart, for example, and let's go ahead and talk about this pattern, because what's significant and pretty much one of the notable things that happened with Fantom is that we've had a very nice long period of just a big, nice accumulation and essentially establishing a longer term bottom for this overall crypto. So as you can see, we haven't really had much in terms of a trend. It's been more or less just flatlining. We did set our new low when we were looking at the FTX dump, but then obviously now reclaim that once again. So overall, we're looking at prices being pretty much right in the middle as a heartline for about 30 cents. So that's a very nice stable point. And even if we go ahead and turn on the VPVR or volume profile visible range here, and so essentially the volume profile visible range, if you're not familiar with it, is just the volume based on the price range instead of the volume down at the bottom like we have, which goes by time. So time versus price. So we are looking at volume based on price, and the big point of mass right now is coming in just below a quarter, pretty much right at a quarter. And so you can see that that's been a nice heartline as well. So between 25 and 30 cents is a big range. So the fact that we're now on top of that is an extremely good sign for a lot of potential upside. And the reason is too, is that typically we look at this as a big support and resistance guide. And so the fact that now we're actually sitting on top of the main point of mass means we're going to have a little bit more of that support to the downside as well, which likely means I don't expect that we're going to see a new lower low. So probably in this instance, once we do cool down, it'll take a lot to actually break back below that. And because the markets have just been so oversaturated with fear and FUD and things like that, I don't really see many more black catalyst events coming in realistically to actually be significant enough to push prices down to that in that instance. But so the other caveat about it too is that if we look on the right, we actually have decreasing volume all the way up pretty much to about 70 cents. And so even in that instance, it's not as significant as what we've seen for about the last 6+ months. So if we actually look at what the overall timeline is compared to our first pullback since last May, we're looking at a total of 36 bars or a total of 245 days essentially. So a long period of just pretty much prices doing nothing but stabilizing in this overall channel based on this longer term. So obviously we have had significant amounts fluctuating within this zone, but if we actually look at potential of what we saw back during the big run, then we're actually looking at a lot of great things. And even if we do find the low, which we found back in July of 21, that low came in at 15.17, so 15.17 cents, compared to our recent low on this FTX pullback was 16.90. So still held a higher low compared to what we found back during that summer's pullback. So if we do draw a trend line, you can see very nice support confirming it this whole time. So we are holding this very nice support, bounced off of that, and then now we're actually getting a lot more of that great upside. So if we do zoom in on the current pattern, for example, once again, I just kind of wanted to point out how this is a bullish inverse head and shoulders pattern. So we have the shoulder, the neck, and the head, and then the right shoulder. So we did have a very huge, significant smash on top of that overall level. So as you can see, current weekly candle is about to close in about 2 hours. So a very nice instance. So we can take an overall neckline that actually formed a little bit more of this trend line, but even still in terms of a shorter price trend line or a price line, for example, very nice bullish break. And looking at the volume once again on the weekly, nice increasing volume as well. So especially after we saw this most recent pullback have decreasing week over week volume for 4 weeks, a nice week over week increase for volume for the bulls, especially after breaking out from a lot of these patterns, setting the higher low, breaking the trend high, smashing out of this inverse head and shoulders pattern. And now not only that, but actually breaking above this exponential moving average for resistance as well. So as you can see, previously we had extreme resistance for this price in between the 12 period, and then we didn't even really see it get that close to the 26 period. So pretty much any test of the 12 was almost instantly rejected. So the fact that now we've broken above it, had that continuation follow through, and now, unless we actually see a major pullback in the next 2 hours, are expecting to have a nice bullish close on top of this 26 period exponential moving average. Now flipping over into the 2-day, because I do really like the 2-day, and especially now notable, kind of like we talked about exponential moving averages. So on this chart, it's the 50 period. So very strong resistance on the 50. Huge, nice break now of it a couple days ago, and then actually seeing plenty of backtest confirming this as support again. And then now not too far, probably one more two-day candle from actually seeing a complete bullish cross on this with the 12 on top, 26, and then the 50 on bottom. So we are still needing to see a backtest though, and a retracement to confirm some of these previous resistances as support now. So big level, I am going to expect as support's going to come in first at 29.49 all the way down to about 28.49. And then if that level does break, then we'll be looking at the 1/4 25-cent psychological mark. In that instance too, that would probably likely mirror up with a lot of these exponential moving averages as support. But we do have plenty of support to the downside now, especially after breaking through a lot of these big, strong up overhead resistances. So now time for a little bit of hopium for an upside target based on what we could be looking at. So if this is a head and shoulders pattern and we did have that very nice breakout, then essentially what we would be looking at is a target, which would effectively run up and test this 41 to 42 cent range, which also puts us right in line with looking left, this big point of previous resistance. So that's going to be a big period as well. So I would actually expect prices to see more or less some sideways trading and get stuck up in between this channel, between about 28, 29 cents and about 41 to 42 cents. Looking at some of the technicals on the 2-day, you can see just how overextended all these levels are. So RSI coming in at 81.31 and looking like we are retracing. So that doesn't mean we can't necessarily go back above once again. But if we also look at this stochastic RSI that did form this bearish cross, every time we have had a bearish cross so far, we've actually had a little bit more of a pullback. And this is the most recent times we've had it too. So even though we can go a little bit higher, you can ultimately see that we have had, and let's actually bring this up a little bit better, that once we actually do get this bullish cross, we're a lot more likely for some downside. And especially now that we have the RSI just so far overextended, as well as the Connors RSI pretty much right at the 100 line at 99.48, we are completely due for a big side pullback, which could ultimately test a lot of those lows. And that is what I'm preparing for and expecting right now. So definitely not going to be making any new entries or formuling into any new positions right now. But once again, that doesn't mean we can't go higher. But just know that right now, once we do start getting so overextended, the markets always do what they're supposed to, just never when they are. So that's always pretty much what it comes down to, is understanding what's the potential, how likely it is, and then having an overall plan for that. But right now, basically on this 2-day chart, you can see we've had a very nice cycle just continuously, almost like a very perfect sine wave. So I would actually expect this to be a pretty good indication that we're going to see a rollover, and likely in that instance, price is pulling back as well. And so I want to actually look at some Fibonacci targets here because I think those are great targets to the downside, especially when they do line up. So let's actually look at the most recent low here to the current trend high. So you can see that the 38.2 sits right at 29.44 cents. And if you can see as well, that's pretty much right in line with this big horizontal price level that we drew before. To the downside below, we have 50 coming in at 27.47, and just below is the 61.8, which comes in at 25.5. So just below that would be the 25-cent psychological. But if you can see on this recent trading pattern, we actually had the upper wicks of these candles get to that level. So I think that could be a very nice level for support as well. So those are probably going to be the two levels that I look at most, is 38.2 at 29, and then below that pretty much right around the 25-cent psychological level. It will take a fair amount of bear volume to actually get down to this level though, so it's not as likely in my opinion. And I do think right now, after such euphoria, we're pretty much looking at a period of almost sideways trading, but ultimately pulling back and testing some of these lows right around the 38.2. But yeah, overall, a lot of really great things looking for Fantom right now. Especially like we were talking about, such a big, long period of just finding prices stabilizing at the bottom is providing that longer term support that ultimately we need to see for big markets to show a lot more continuation to the upside and to continue a new start to a new rally cycle. So would love to know everyone's thoughts down in the comments sections below. Drop me a note. Do love getting back to everyone over there. Thank you for watching so much. If you did stick around, would appreciate you hitting the thumbs up, like, and subscribe button if you haven't done so just yet. As always, appreciate all the continued love and support. It means so much. Stay safe, take care, and I'll catch you back in the next video.